every trade is context, idea, plus setup. And if we don't have all three of those things, we don't have a trade.
Garrett Drynan is an equity and options trader
who develops algorithmic strategies and trading systems.
If you want to capture a big trend, you really don't want to be getting in kind of like after the cat's out of the bag. You really want to be able to time those moments when it transitions from compression to energy. Half my trading is fully automated algorithmic trading. I build models. And part of that is you're studying the data. When you're developing a strategy that's going to be automated, is you're sifting through and working out like what's really robust, like what really matters to this play so that we can actually define the criteria for this setup. And then we find, hey, you know, this one variable is so powerful. Like now I know like this needs to be present like every single time.
What data points are important for me to collect? And which ones are the ones I'm just wasting my time collecting? Do you have an answer to that?
I would say.
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be the Trader. Today is a special day because we're here in New York City at SMB Capital's corporate office, and I have my man Garrett here who specializes in trend trading, so I wanted to bring him here today to really dive deep into that to help all of you. So Garrett, welcome to the show, brother.
Thank you.
Absolutely. So when it comes to you specializing in trend trading, can you give the audience an idea of what that really means?
Yeah, so our job is to capture big trends.
Okay.
Right, so you look back on the day, sometimes you see a stock that trended all day intraday from open to close. Sometimes the market does that. Or sometimes you look on a daily chart and you just see this massive trend on the daily chart, right? Like a great swing trade. Usually these things are with trend. That's kind of the nature of it, right? That's why trend is in there. Yep. But a lot of times these are big breakout trades, big catalyst trades. They usually involve a lot of volume, right? Because you kind of need that. But we're good at holding trades, right? Like a lot of times you could be scalping and that's awesome. Sometimes we're scalping to get into a position, but ultimately our goal is to see those big themes in the market and capture them.
Is there like a criteria you think about to determine before it happens to become a trend? Like you're thinking if it hits this, the likelihood of it becoming a trend is 90%.
Yeah, absolutely.
Like that.
Yeah, no, we're teeing these up ahead of time.
What is that criteria?
Yeah, so a lot of the times, first of all, market environment, right? Like I always say, we talk about this on the trend team all the time. Like every trade is context, idea, plus setup. And if we don't have all three of those things, we don't have a trade, right? So the context and the setup are the most important to me because the idea is easy, right? I can't tell you how many times I've had a trade idea and that's it. And I put on the trade, of course, it doesn't work, right?
Yeah.
So the market context, right? Like if we're gonna get long and we're gonna look to hold something and swing something, like the questions we wanna ask ourselves, first of all, is this a bull market, right? And of course you could answer that question on multiple time frames, but essentially like, is the market ripe for this play, right? So even more specifically, what kind of playbook should we even be trading, right? So for all you breakout traders out there, there are some markets where like everything's working, right? And then all of a sudden the market changes and then you give back all your P&L and you wonder why, and that's just because the market environment shifts. So first we want to make sure we're in the right kind of market for this, and then we want to make sure we have a really good idea. And usually that's involved with a theme, right? You've the quantum theme, you've got Bitcoin, you've got Tesla, you've got all these different sectors or these momentum names, right, that might be in play for a period of not just a day, but like a week or months, right? Yep. So we want to really identify the fact that not only is the market ripe for this kind of play, but also there's a tailwind, right? There's something behind our trade that should really suggest that this is going to keep going, right? Like institutions are involved. You know, the semiconductor trend that we had last year is like a perfect example, right? Because that had a fundamental catalyst that was in the early stages and it had great technical setups like across the board, and then the volume in the options market and everything was confirming this theme, right? So that now we know where our focus is.
Yep.
We know what our ideas are. So now we're just looking at the charts and saying, okay, is there enough energy built up for this breakout to work. If there's a catalyst, what could that do to the stock? Like, could it get it above a key level on volume where it might give us an entry? So we're looking at, we really want to see compression.
By now you know our show is sponsored by Cobra Trading. I use them every day and for good reason. I love the fast execution and the great customer service. And it's not just me saying this. Both Benzinga and Forbes Advisor awarded Cobra Trading best-in-class ratings in multiple categories for day traders. You can sign up now with the Be The Trader link below, and Cobra will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. I know you'll be as happy as I am when you trade with Cobra. Now let's get back to the show.
Because the way I look at technicals is that volatility kind of goes in cycles, right? So you have volatility compression, and then you have expansion where something might make a big move and then it needs to rest and build up energy again, right? And so if you want to capture a big trend, you really don't want to be getting in kind of like after the cat's out of the bag. Like, you really want to be able to time those moments when it transitions from compression to energy. And so a lot of the times we'll look for those beautiful tight consolidations on multiple time frames. We have a key level. We might have a tailwind already in the sector, right? It's just been resting for a little bit, or we might have a fresh catalyst that breaks it out, and then we want to see the volume and we want to see the options market just kind of pop off, and then
Well, I'm curious about what was I forgot earlier, you said there's 3 criteria. It was the context, idea. What was the middle one?
The setup.
Setup, okay.
Right.
And the setup was what you just mentioned, like where it's in a tight range or something like that?
Yeah, and it's really like people will talk about like the trigger for a trade, right? Like, what's my trade? Like, what's actually going to get me in, right? So I have, the context is great, I've got a great idea, but the setup to me is all about the timing and the risk reward. Like, we want to be able to control our risk. We want to be able to time it right, so that we're not just going to get stopped out on a good idea, right, if we're early. So the setup is really like, okay, the time is now. Like, this is what we want to see. And so what we'll do as a team is we'll outline, if we have an idea, we'll outline the context, make sure that's there. We'll outline the idea, right? What's the chart look like? What's the fundamental driver? What's the theme? Like, why should this make a big move? And then we'll talk about what do we really need to see in order to put on the trade. And to me, like, that's the setup.
Now, I know, because I've been here for a little while, and I appreciate you guys being so accommodating and just welcoming us here. And I talked to you off camera, and you also really focus on building indicators that help you stay in those swings a lot longer. Could you dive deeper on how you do that, and what questions you ask yourself to do that?
Yeah, so it all started because a lot of what I do, like half my trading is fully automated algorithmic trading. So I build models, right? And part of that is you're studying the data, right? You have a trade idea, you're going to code it in there, you're going to run a back test, you're going to collect all kinds of data, right? Like, what was present during that trade. And you might find that it's a certain type of stock that performs well with the strategy. You might find that volume needs to be a certain way. There are a million things you can look at.
It can be different for each type of...
Yeah, absolutely. And so what you're doing when you're developing a strategy that's going to be automated is you're sifting through and working out, like, what's really robust, like what really matters to this place, so that we can actually define the criteria for this setup. And so just from doing that, that's taught me a lot about these plays that we trade discretionarily, right? Because we're building these models, and then we're studying the data, and then we find, hey, this one variable is so powerful. Like, now I know, like, this needs to be present like every single time. So what that does is it leads us to say, hey, like, why don't we just build a market filter for this, or an alert, so that when we're discretionary trading, we can actually see all the stocks that are doing this, right? So an example of that would be, you might want to have a market filter that shows you all the stocks intraday that are doing the most volume, that are also the strongest stocks in the market, right? And that's just vision, right? It doesn't mean you're going to trade them all, but we were talking about stock selection earlier, and how important it is. And this really helps with our stock selection because it lets us see everything that's active, everything that's in play that might have the potential for a big move. And a lot of times when we're watching something like that, that's what allows us to pick up on these big themes, right? Because we might wake up and we might not be thinking about quantum names, right? But all of a sudden it's 9:40 and there's 8 quantum names. There aren't even 8 quantum names practically, but there's 5 quantum names in the top 10 of this filter that's scanning like 2,000 stocks. Well, we turn to each other and say, well, it might be a quantum data, like what's going on in this space. So that really helps with our stock selection.
You mentioned also data, like you like to collect a lot of data points, and I know people, when they hear about backtesting or building indicators or any type of algo, like you mentioned, their number one question is, what data points are important for me to collect, and which ones are the ones I'm just wasting my time collecting? Do you have an answer to that?
I would say be creative. Like we always start with what we think should be the case, like because we're traders, we're sitting in front of the screens all day. Like we're not data mining, we're certainly not math PhDs, right? Like right. I'm an idiot, right? I'm just an idiot.
Well, you build algorithms, so I don't know about that.
I'm an idiot that figured out how to code, right? So I'm able to test stuff that I see in the market, right? So we're just looking at charts, we're studying setups, and then we're kind of like, we'll just come up with a hypothesis, right? Like I think this setup works.
Can you give me an example so we can kind of like see it as a case study?
Yeah. So let's just talk about an earnings day one play.
Okay.
Right. So this is a model that we have that trades earnings day ones, and it's fully automated. It gets out at the close. It gets in early, and we've seen these work discretionarily, ever since I started trading. It's one of those trades that just doesn't go away. Now, some quarters are better than others and all that kind of stuff, right? Environment. But we might say, okay, we know that the ones that do really well tend to do tons of volume. But then we might say to ourselves, well, that's not really enough. Like, what is tons of volume, right? Because what tons of volume for Apple might be different than tons of volume for like some small cap, right? And if we're going to talk about relative volume, that's also very different, right? A small cap could do 50 RVol, right? Yeah. Whereas 3 RVol, 4 RVol for Apple is like pretty huge,
yeah,
right? So what we'll do is we'll find ways to normalize those relationships. So we're just kind of creative, saying, okay, like what could we combine to get a value that actually tells us something about this volume that's significant, right? So that it's not overweighting small caps or like underweighting Apple. And so we'll look at things like liquidity, right? Like how many trades are going off per minute? Like how much is it moving for the spread that it has on every trade, right? The bid and ask spread. Things like the notional value, right? Like how much capital is flowing into the stock. And then we combine that with RVol, right? And so we'll do something like that, and that's a brand new indicator, like a brand new feature that we'll test in the model when we look at the data, and then we might find, hey, you know what, this really, really, really matters. Like this is great. This really makes this strategy tick. Now let's go make a filter, based off of this indicator, and that's kind of how these things are born. One of the biggest variables that we found for this earnings strategy that to this day I look at every morning during earnings season is just the relative volume that the stock's doing in the extended hours when the earnings report comes out, right? Like we never thought that this would be like one of the key variables to our algorithm, but it absolutely is. And so now the way that we kind of filter down what to look for in the morning is just by looking at this filter and say, okay, what's doing the most volume, when the report came out, and then those are the names that will then go dive in, read the transcripts, look at the earnings and all that kind of stuff.
So for someone watching this and they're brand new to trading and they're hearing you, is it more, just so I make sure I understand correctly, is it more of, you could also just look at previous things that have worked in themes like SMC or semiconductors. You're thinking, I missed that sector. Let me go look at that. Let me go look at what were the best ones, and then start asking, building hypothesis, and then just trying to kind of see what is the most important, whether it's volume or so forth.
Yeah, because we'll just make a list of the things we think are important, and we'll figure out how to quantify them, like put them into the model, right? So that it returns a value, and we can study those values. So if something's not working, we'll go look at the charts. We'll say, like, what's going on? What kind of trades is this catching? Also, if we see something in the data that doesn't make any sense to us, like we're probably not going to use it, right? Like we want, like I said, we're not data mining. We're not really leading with the data. We're kind of utilizing the data to confirm things that make a lot of sense to us, and to figure out maybe more specifically what things should look like for these trades to be really good. So we're really leaning on our experience, looking at the charts. I'll sift through hundreds of charts and just qualitatively look at the volume or look at certain things about it and just make notes to myself about like what do I think really matters to this play, and how can I get an idea of something to perhaps like test in this particular model.
Someone watching right now, like they're a swing trader and they want to hold their position much longer than what they're currently doing because they're missing out on big parts of the moves. Is there any indicator they can use right now, or anything, any advice you can give them to be able to do that?
Yeah, so I was talking about this week in the Inside Access meeting.
Yeah.
We were going over trailing stops and different types of trailing stops and what's best to use when, right? And it's not that trailing stops are necessarily going to add edge to your strategy, but they could make you trade it a lot better. And so like the way I'll look at a trailing stop is that, I mean, like how many times have you gone through an experience you've been like, I should have held that, and I meant to hold it, right? It was like part of my plan, and then it ticked up, and then it started to get a little weak on the tape, and I got out, and I was like, wait, it kept going, and this was supposed to be a swing trade, right? And you're kind of like over analyzing the trade. You're forgetting to zoom out and kind of see the big picture. Well, trailing stops can solve those problems that we all have, right? Like maybe I'm not good at holding, and I want to be better at holding. Maybe I always overstay my welcome, right? I always let it turn. It starts to go against me. My P&L starts to go away. I'm like, oh, I don't want to get out here, right? We've all been there.
Yep. I'll wait.
I'll wait, and it goes back to red, and you're just ignoring all the signs that the market's turning, right? So the way I see trailing stops, and we do use these in some of our algorithms, is that they can solve those problems that we all have where, okay, if I want to be better at holding, and I know that this particular, say like ATR trailing stop is really good at just flatlining and keeping you in trends, well, it could be like a really nice way to say, all right, well, for these swing trades that I know I want to be able to have some discipline to like hold this thing as long as it's working, I'll designate a portion of the trade against this trailing stop so that if it keeps going, I'm going to be in the trade. And then it's kind of nice because you can see where you're going to get stopped out, so you're not too afraid of the give back, because it gives you a little bit of a guideline for that kind of thing.
I know people are going to want to learn more about you, Garrett, and they're going to want to, because you mentioned you have a meeting earlier in the conversation. They're going to be like, what is that meeting about? Could you tell us real quickly how they can learn more about you?
Yeah, so we do these Inside Access meetings. Mine's called the Bionic Trader. It's on Tuesdays for an hour after the close. And I go over these signals and these indicators. And a lot of them, like I said, we get from our models. We use them in real time. We use the market filters. And these are the kind of things that I'm sharing. And I'm just going over the ways that I use them, the ways I leverage them. And then I'm oftentimes actually sharing the tool with the group.
Oh, cool.
And what's great about this is like I get so much back from doing this, because like more often than not, like I'll share something like that and then I'll just get like 10 emails from the members being like, hey, so I started using your thing and I realized it was like really good for this. And there's like something like I'd never thought about before. Yep. So it actually turns into sort of a collaborative experience with this stuff, because you certainly, like the more you share, the more ideas you get back. I mean, people have hit me up with like fully automated model ideas, just from being in these meetings. So it's a lot of fun.
That's awesome. That's awesome. And well, I know what we'll do for everyone who's watching today, we'll have the links down below so that way you can learn more about Garrett and listen into those conversations, because I'm telling you, you're going to learn so much, especially when it comes to indicators from this man. And again, Garrett, thanks for being here, brother.
Thank you, Alex.
Absolutely. Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.